Hello and welcome to January 11th. KR exited 116% in 7 days. Let's go look at the numbers. So right there, there we are. We got now it's 8 days because the clocks have changed over in the East Coast, but we are still here at 11 o'clock on the West Coast. And this trade, KR, we got into this trade on the 5th of January for 75 cents, and we exited today at 111 at 162. So let's bring up our trusty calculator, and 162 return minus the cost of 75. And remember that options are based in hundreds. So therefore, the $1.62 is really $162.75 is $75. And we have a net of $87. $87 divided by the cost of 75 as a percentage, and we have a return of 116, right on the dot. Now, let's go look at the chart and for what the results were. So here's the chart, and explain over here before I get into the final results of today. Over here was a put. I did a put on this, and this was an error. I did a put on a 50 above the 50-day moving average, and the 50-day moving average was, look, inclining. It was going up. The end result would have been that was a wrong, taking that wrong trade. You put the rule of thumb from Darren Kimoto of Online Trading Academy, OTA, Irvine Campus, is when you set your moving average line, whatever you want, be it 10, be it to 30, be it to 50, but the bottom line be consistent, and then set the rule. Anything above the moving average is calls, anything below the moving average is puts. Keep it that simple. We are on the 50-day moving average here because that is the one that the major market and major traders follow. All right, so that said, moving on, we came into this setting up in this trade on this candle here. We had this dip right in here, and I missed this dip. Oh, we were in the trade. That's what happened. We were in this trade and we got stopped out. We got stopped out right in here somewhere. We got stopped out on this date, on this actual date, and then we picked up the trade again. And then that's the 5th. Oh, let's bring in the data box. Okay, so there's our data box. And we got stopped out here on the 4th, but then we see that the conditions were acceptable, and we got back into the trade, and then we got traded here on the 5th, as you saw in the previous screen. So that said, then we end up shooting up our 3-to-1 was 50.48. But remember, there are 4 exit rules to the trading. One is your initial stop at the bottom of the candle. I'm using a 1 candle risk to achieve 3-to-1 return. The other is that once price has been established, I then go and say, okay, 30% of 75. So let's bring up the calculator again. It would be 0.75 times 70, which is when we're only going to give up 30%, and the end result would have been we would have put as soon as this was accepted, then we would move the stop from here to whatever minus 30%, whatever the option of 52 cents. And then the other 2 exit rules are the profit-taking rules. One is price reaches and hits the 3rd ratio, we get out, as you can see in my previous videos, or the ROI reaches over 100 ROI, and then we go to last bar low. And that's what we did here. We went to last bar low, and that's when we got stopped out. So let's review the exit numbers here. Profit exit at 116%, 7 days. $87 was the take times 6 contracts, giving us a gross return of 522, or profit 522, minus $8 in fee, giving us a clear net of 514, charged against the 1536 on the ode, coming out with a new ode now of 1022. So that said, we now go on to evaluation. The question is, what did we do right? What did we do wrong? And what could we have done better? So here we go. What was done right? Right, we took profit ROI above 100, last bar low. We followed the rules. That's right. What did we do wrong? Nothing. We followed the rules. What we could have done better? We could have done better is that when this reaches over 200 ROI, exit if price is below the close of the previous candle that established the 200 plus ROI. That is where I could have done that, and we would have gotten out at up here at the top of this candle. What would it have been resulting? Well, here we go. If we go and drop in the ticker symbol for the option, you can see here that we read the close was at 249. Let's zoom in a little closer. The close would have been, the close was at the close was at 249, and then it opened at 257 and then fell down. So could we have gotten out around 249? Maybe. The problem with options in the lower time frames is that they do have gaps. It takes time for the computers to all catch up and all the traders to catch in. So it came out to like about 220. It came out to 224 if I go down to the minute chart. But the bottom line is that we made money. We took profit off the table, and the reduction of what's owed now is a lot less. And that, ladies and gentlemen, is the conclusion of this trade at 116% for KR. And remember, what you did right, what you did wrong, and what you can do better. And with that, I thank you very much for stopping by and checking it out. And catch me on my next video. We had a 190% return on, catch the video, and you'll see where I made that 190. And with that, thank you very much for stopping by. Drop your comments and good wishes, and to my fellow OTAs. We'll see you at Irvine on occasion. With that, bye-bye.